Hey everyone. As 2019 comes to a close, I want to give you 3 reasons 2020 will be a great year for investors. The first reason is that the economic outlook has been rejuvenated. Last summer, the economy looked like it was weakening, and it was happening fast. We had an inverted yield curve, and a lot of economists were predicting a recession in 2020 or 2021. But that's all been pushed back. We've seen some strong movement by the Fed, we've seen things stabilize, and the runway is looking much more positive than it had been. We have a solid job outlook with 1.5 to 1.8 million jobs in the pipeline for the next year. The unemployment rate remains near a record low. Discretionary income is near an all-time high, and consumer confidence and business optimism are both getting a little bit stronger, and they're both near a record high as well. Retail sales are growing by more than 4%. The yield curve has normalized, and the Fed has made reassurances that it's going to do whatever it takes to keep this growth cycle alive. The second reason 2020 is looking great is because construction is still pretty limited for most property types. Construction labor shortages and rising construction costs are slowing the pace of development. Several apartment projects that were targeted for a 2019 opening have been pushed back into 2020. So we anticipate another 300,000 units coming online in 2020. That's up a little bit. Industrial construction is also up, but it's mostly in very large format facilities, over 500,000 square feet, and the majority of it is in 5 markets: Atlanta, Chicago, Dallas, the Inland Empire, and Houston. Office, retail, and hotel construction is all looking good, and although self-storage has some overdevelopment risk in some markets, the pace of construction has begun to taper. The third positive trend for 2020 is that capital costs are low. In late 2018, the 10-year Treasury surged to 3.2%, but it came back down in 2019 due to trade war uncertainty and Fed action. The Treasury rate fell to 1.45% in September, then it began rising again, but it's still under 2%. Rates are unlikely to fall substantively in the next year unless there's a major geopolitical or trade-related disruption. So they should hang in that 2% range over the course of the year. So to wrap up, although I've mostly highlighted the positives for 2020, there are still some risks. If there's a trade war escalation or global economic growth is disrupted, say by the Brexit, or if the US geopolitical climate has a shakeup with the impeachment or a 2020 election, those could all change the rules a little bit. But mostly the outlook is very good. Demand is solid, construction and oversupply risks are limited, and the cost of capital is low. So all the investors out there have an opportunity to continue to drive forward with their investment strategies in 2020.